Hello guys, welcome to SZ Trading. Or if you are new to this channel, kindly subscribe and turn on notifications for more videos. Now let me quickly explain a strategy here, which is a weak field. Before then, let me explain weak field. A weak field is a direction where the market is heading to. So the market structure will determine whether the weak will get filled, or depending on the market condition, whether bullish or bearish. This particular week feed happened recently on the BTC chart, which is just yesterday here on 16th January. Now let me quickly explain this. After explanation here, that will move down to the live chart to see how it's being played out in real life. So let me quickly explain this week feed strategy. Now in an uptrend, let's say the market is going up in this form, creating higher highs and higher lows in this form. Okay, you have your trend line going up. Now, for this strategy, we will be making use of H4, H1, then M15. Okay, these are time frames. Now, let's say our market got to this point on H4. Let's say you meet the market at this point, and this zone here on H4, there's a candle in this form. There's a candle, very big candle with a long wick, something like this. I know most of you might have seen this kind of candle always. So and as an amateur trader, when you spot this kind of candle, what will come to your mind is what the market is going to be bearish. Okay, but in this case, it's not going to be bearish because this is a weak field. This is a candle that needs to be filled. Now, because since there's momentum in the market which is bullish, the current market condition here is what bullish, and you have this kind of candle on H4, all you have to do is go down to the lower time frame, which is H1, and observe the market structure. In an H1, you might have something like this. When the candle is at this point, when the market is at this point, trying to create the next candle on H4, quickly go down to H1 and observe the market structure. In H1, you might have something like this. The first candle might be bearish in this form. It might be bearish, followed by what? The next candle also bearish, also bearish. Then the next candle after these two bearish candle might what? Be bullish. Okay. Since you have this on H1, you can see that this already form a market structure. So you quickly draw your what? Your support at this point. Okay. For me, as a professional trader which I am, if I observe this kind of market structure on H1 and this on H4, I'll quickly go for a buy because this support has been held already. So all I have to do is to enter my position from this closure of this candle, then place my stop loss at this point. In other way one, for you to wait for further confirmations, wait for the next candle to close above the high of this one, something like this. Then you enter at the closure of this candle, then your stop loss below the support, then take profit around the resistance upward, the nearest resistance. Now let me explain this. Now when the market is trying to open on 4 hours time frame, these two candles on H1 represent this week that is going to come down. Okay, it's going to represent that week, going to come down within that week. Okay, something like this. Now these two bullish candle will represent this body of the candle, you can see. So this rejection candles means what? There are two bearish candles on H1. Then this full body candle means what? There are two what? Bullish candle on H1. That tells what? That four candles make up 4 hours candle on H1. So you can see, let me come again. If you observe this kind of candle on H4, quickly go down to what? The lower time frame, which is H1. Observe the market structure, and I use this particular one as our market structure as illustration. We use this for an example. Now, like, look at it like this form. This is already a market structure. First of all, market became bearish, creating our support here. The next one, you can see this is already a market structure. Okay, so I hope the explanation is quite okay. So let's quickly go into our live chat to see how it's being played out in real life. So if you have any question towards this, drop it on the comment section. Moreover, let's go to our live chat. Okay, so what we have here now is a chart on BTC USDT. So this is a 4 hours time frame. So let me zoom zoom out a little bit to see the candle very well. Okay, let me zoom out to see the candles very well. Okay, so let me quickly explain it on the live chart here, the weak field. Now looking at this candle here, you can see that this is before then, let's observe the market condition, whether it's bearish or bullish. So from this, okay, let me zoom in to observe the trend of the market. You can see the market is currently bullish on H4. You can see the market is bullish on H4, having your uptrend from this point. Even if you zoom in furthermore, you observe the market has been on what? Has been bullish for a very long time. You can see it has been bullish for a very long time. You can see. So now let's focus on this current one. From this point, you can see it's bullish. So now let's zoom out already. Now let's zoom out so that we can see the candles very well. Now, observing these candle formations, you can see, like what I was trying to explain, this is already a weak field here. This is also a weak field. Okay, so it has been happening on BTC recently. So now let me use this particular one as an example before I will further explain weak field in a bearish market. Now, on H4, this candle is formed. You can see on H4, this candle is formed. I know most person will be expecting a sell from this point. I know most amateur traders will be expecting a sell from this point. Because if you observe this candle very well, it might see that what, though it's bullish, but the sellers drag the price to this point before closing at this uh point here. Now, due to the momentum in the market, and the market show that the current trend of the market is bullish. So there's momentum, there is bullish momentum in the market. So there's no way the market is going to sell. That's why I say, okay, for a weak field to open, sorry, for a weak field to hold, there must be a momentum in the market. Okay, it could be a bullish market or a bearish market. So in this condition right now, what we are seeing here is a bullish market. So whenever you observe this kind of market, or sorry, this kind of candle in a bullish market, okay, all you have to do is what, like I said, you go to the lower time frame like the H1 and observe the market structure, what is currently forming there. Okay, you can see this happens on the Friday 17th, and today is the 18th already. This happens on Friday 17th. And from today's date is 18th January 2025. So this happens on 17 January 2025. Okay, so now, like I said, and as I explained earlier, when you observe this kind of candle, which is weak field, don't go for a sell. All you have to do, this is an opportunity for you. Since this market is bullish, okay, for you to get an entry, you go down to lower time frame like 1 hour and observe the market structure. It's the market structure that will give you an entry that will enter the market. Okay, so now the market structure could be a something like this. Let's say on a lower time frame like 1 hour, the market might decide to come down like this, going up like this. It might even create a double bottom for you before shooting up. So you can see this is the market structure. Let's say now this is an H1, and you have this one on an H4. All you have to do is what, go down to H1 and observe the market structure. The market structure on H1 or the lower time frame could be a double bottom, or it could be a support and resistance. Okay, it could be a support. So all you have to do, if a support is formed on the lower time frame, you enter for a quick buy to this weak gate fill. You can see even though the week has already get filled, keep on pushing up because there's already momentum. So this one is already giving you an entry opportunity so that you don't buy when the price is at a very high point. Okay, so like I said, firstly observe this kind of candle of H4, then come to lower time frame. You can even observe it on daily time frame or weekly or monthly. but in most cases I do use H4. So whenever this kind of candle, when you spot this kind of candle in your chart, is an opportunity for you to enter for a buy or a sell, depending on the condition of the market. If the market is bearish, enter for a sell. But since this one is bullish, you enter for a buy. Okay. So it's very simple to trade. All you have to do is what, look for a market structure on H1, then you bag in some pips. So after explaining all those things, I believe by now we should know what weak fees actually is. So let's continue with our illustration on the whiteboard. So let's switch to the live board, the whiteboard, and explain so that I can explain the bearish condition in a weak field. So as I explained in the bullish market, so let me quickly explain on the bearish market. Let's say in a bearish market is creating a higher lows and lower lows in this form, creating higher lows and lower lows, market going down. And in H4, like I said, we'll be making use of H4, H1, and M15. Now, in a bearish market, when the market is coming at this point, let's say at this spot here or this zone here, you have a candle that is in this form, a very big candle, a bearish candle in this form with a lower long wick on H4. Like I explained previously on the bullish trend, since this one is bearish, all you have to do is what, go to what, you go to your H1, observe the market structure, very very important, observe the market structure. Now, the first candle on H1, this is H1, right? The first candle must come as what? As a very bullish candle. It must come as a bullish candle, followed by another bullish candle. Okay. Now, the next one, which is the third one, might be a bearish candle. I'm just creating a market structure. Okay, it might not come in this form, but this is already a market structure. Let's say now you draw your resistance at this point. Now, since this is formed already, three candles remaining, one to close. For me, I'll enter a sell from this point, placing my stop loss above the resistance here. Then the next candle should push down at this point. Okay, to fill up the wick. So now, coming to H4, since these ones have already formed on the H1, which is the 4 candle. Now let's quickly see the reaction on the H4. Now, the first of all, the market is currently at this point. Then there is a wick up. Then the market finally wick down. Okay. Now this wick up represent what? This retracement as what? Bullish candles. Then this full body candle represent these two candles that are just from here. That are just from here. You can see. So I believe this explanation is more clearer. So my next video is going to be on exhaustion week. So kindly subscribe to this channel so that you can have access to more videos like this. Thank you.